Hello everyone, this is Evan here from the Trade Risk on Wednesday, June 7th, here with a midweek market recap video. We're going to cover all the major markets, the current market environment, and then finish off looking at some sector analysis. Feels good to be back. I've been on a pseudo vacation, had some family visiting over the past week or so, haven't really been able to produce any of these videos, so it feels good to get back into the swing of things. If you're new here, I'd love to have you subscribe to our channel. We publish updates a couple of times a week, and most of them market recaps, trade ideas, those sorts of things, all looking at charts, technical analysis, all that good stuff. So with that, let's get into the charts here. The SPY ETF finished up 46 cents on the day. That's plus 0.19%. It was a pretty quiet session, all things considered. It's been quiet the past several days here. This week has been pretty quiet. Kicked off the week here on Monday with an inside day. Traded lower yesterday on Tuesday, taking out Monday's lows, and then sort of recovering and just kind of closing neutral here above a rising 8 and 20 period exponential moving average here on the SPY daily chart. So S&P 500 right underneath, trading right underneath all-time highs, and it does not seem to be too concerned about some of the events that are on deck here over the next 24 to 48 hours. We got UK elections, we got FBI director, ex-director Comey testifying, and we also have ECB policy that'll be coming out all in the next few days. And the market at this point seems really, as based on this price action, to be very muted, very compressed. Volatility is not so much there, and we are still trading up near highs. We've paused a bit the last several days, but still, from a technical perspective, still very much holding up in the upper echelon, upper levels here as far as trend momentum goes. So that's the S&P 500. If we look at the weekly chart, again, you can see same picture. We broke out definitively, was back at the end of May here, this 24th of May, call it the 25th of May for those who want a little more confirmation, but we resolved this sideways range that we chopped in all between March, April, most of May, got resolved to the upside, and now we are in the process of trending higher, slightly more accelerated trend, and again, right underneath all-time highs. So bulls very much in control. If we go to the IWM, we're still paying attention here, starting to show some signs of firming up, starting to show some signs that maybe the IWM can get some rotation, and maybe it can leave behind this very long now range that it's been in since December of last year, just moving sideways in between this, call it 6-point range for most of these past 5 or 6 months or so. And you can see it's just getting to the upper levels here. I know this line is not drawn to precision. Some of you, I know, take offense to kind of cutting through a lot of this supply here, but what I really am looking at, and the way I sort of draw this horizontal upper bounds here, is just getting through the majority of this supply. So I just want to see price starting to close above the bulk of all of this traded supply, and you can see we're up, we're just on the fringes of kind of breaking up here and starting to clear some of these heavily traded levels. I really would like to see it just hold above 139, get some closes above 139. You can see the 8 and 20 period moving average there on the daily chart have curled up. They are now bullishly aligned. Now we'd like to just get some momentum. Saw some nice volume come in back here on the 2nd and the 1st of June. So that was good to see. Pulled back on some lower volume. Now an ideal situation would be a nice uptick, get back above 140 or so on an uptick in volume. That might signal that we are ready. In fact, maybe this time will be when we can finally leave this range behind us. But so far, again, firming up. There are some constructive signs here. This washout last week, 2 weeks ago on the 31st, the end of May, proved to be a nice kind of stop run and false look here back to the downside. And again, so far bulls are holding up above that 20 period moving average, and the NASDAQ 100, no story change here, continues to push higher. Let's take a look at how much this is up on the year. An incredible 21% Truly fascinating results here from the NASDAQ 100, and it continues to just push higher. Volume pattern still looks good, and it just very low volatility, grinding higher day in and day out here by the NASDAQ 100. So that's the landscape overall. Bulls in control. And now we'll just want to keep our eye on the events over the next 24 hours or so. Make sure we can close strongly in a lot of these major markets here. Make sure we don't get derailed by any of these, by sudden spike of volatility. On the downside, where would I start to get a little more defensive? Well, if we took it back to the S&P 500 is on a real tactical, short-term sort of active trader mindset. If we started to lose, say, 242 here in the SPY, that's when I'd become a bit more concerned. Neutral in the short term, again, from an active trader perspective. For you longer term holders out there, longer term participants, really 240 or so falling back into this old range, and then you could use some of those longer term moving averages, but don't worry too much about the speed bumps in the short term if that's your time frame. As always, know your time frame, know what you're trading and what you're really looking to get out of markets here. So that's the landscape overall. Let's get into some of the other major markets. We'll start with TLT, which was down today almost 0.5%. It's been ping-ponging back and forth here just to start the week. We had this gap lower of about 0.5%. Then we popped up 0.5%, and now we fell 0.5%. So we're seeing a little bit of volatility here just in this 124 to 125 range. See an uptick in volume here. Not sure if there's much to make of it right now. From a bigger perspective here, I still like TLT ever since it resolved and cleared this, say, 123 level, all of these recent highs, this recent sideways range to the upside, and you can see the trend here in the short term is higher. So until it starts to roll over and until it starts to, or if it starts to roll back over and fall back into this old range, that's when I would become concerned. Otherwise, I still think bulls are in control. We did have a trade in this recently. Premium subscribers, we did get in here. At some point, we sold out partly, I believe, on Friday, and then the other part on Monday of this week. So no longer in this trade, but did have a successful long entry there, and now just kind of waiting patiently. So that's TLT. Let's go to GLD next, which had a nice start to the week where we saw this upside move a little bit on Monday, and then we saw acceleration yesterday on Tuesday, and we gave a little bit back, kind of filled this gap in here in GLD. You can see we're back to the April highs here. The short-term trend is higher, 8 and 20 bullishly aligned, a little bit of an uptick in volume recently. Go to the weekly chart, you can see 8 and 20 also bullishly aligned. So, it's not the cleanest, not the best looking setups, certainly that I see around here, but GLD seems to be working right now in the short term. So until that changes, maybe you want to stick with it. Silver, kind of a similar situation, not the cleanest setups out there, but short term, bulls are getting it done. They've ever since this record-breaking kind of downdraft here throughout the month of April finished, we have been in this uptrend. The 8 and 20 period have curled back up, so we got this steep trend line, and we're starting to just continue to move higher. We were down today, but again, still in the short-term trend, we are marching higher. So not seeing a lot of opportunity in either silver or gold, but something to pay attention to for you metal traders sticking with that short-term trend. What else do we have? We got USO, which had a pretty loud day to the downside, minus 5%, really coming back to the year-to-date lows now, and USO is back below this $10 level. $10 has been that line in the sand for me, and we, coming into May, we pushed above it pretty violently. Was not expecting this type of move here off of these lows all the way up to 1050. It took me for surprise. Never had a trade in it one way or the other, but now you can see we just as quickly rolled over and kind of gave it all back, uptick in volume today, and we're back to those year-to-date lows. So USO sellers in control here. Don't like the look of this right now. I don't see any real bottom formation forming as of right now. Maybe this is the sort of final stage of some type of capitulation, but I'd be hard pressed to put my money there at this point to get in long on USO. So for me, just paying attention, just a spectator, waiting for better setups, waiting for this market to set up a little more favorably, but sellers certainly in control. And natural gas sellers have taken control of this market ever since last Tuesday, the 30th, when we started to break down from this sideways range. If you recall, March we had this nice uptrend higher that turned into a sideways range, and then we were kind of just watching it in here saying, well, it needs to regain momentum, needs to clear 750, 770 back to the upside. If it can start to do that, bulls in control. Never really did that, had a brief kind of stunt above there, but it quickly gave it back over the next couple of days, and now we're rolling back over. So I'd pay attention to these March lows down here. 650 seemed to be a good retest level for natural gas, but sellers in control there. Volume really hasn't picked up too much here on the downside, so maybe that's a slight plus, but I'd be watching to see the reaction down here around 650 or so in natural gas if it can get down there. So that's it for major markets. Let's talk about some of the sector analysis, and not a whole lot to talk about. Really, not much has changed from the leadership front. I mean, semiconductors is sort of just laughable runaway to the upside. You could see even just, kind of blowing through this long-term channel we had, the upper bounds of it, and really just accelerating higher at this point. So semiconductors just continue to relentlessly push higher. You could throw technology in there. XLK continues to work as well. Healthcare also working, trading at highs, trading at and taking out these prior highs here, and this chart's not adjusted for dividends, so keep that in mind. But XLV, really like it from a sector perspective. Utilities are working. They recently emerged from this 3-month, 2-month consolidation pattern. Staples are working, and what else do we have? IYT, that was the one I was trying to go to. IYT, pretty interesting developments here. I think this is something that's fairly interesting. Is this was really kind of on the fence, really weak here as it was starting to break below this 160 level, and this is at a real sharp recovery, real sharp surge here over the past couple of weeks. Look at the uptick in volume in the IYT. This is the transportation average, and you can see really hasn't nothing structurally has really changed here. We're still in a range, arguably going back underneath these highs from March 2017, but it was a good save here, and there was a pretty good amount of volume coming in. So it's something notable. Airlines, those types of names, they've all been working, or most of them have been working. So that's IYT. The things that the sectors that I'm paying attention to, I mean, XLE, this is a not working sector. I think this is one of the few that are just in the not working bucket. This continues to be in its downtrend. So that's there for the bears. I think financials are still an interesting battleground here. I think this is going to be an interesting development to see which way they resolve. We're still moving sideways here. I know you got this ominous sort of head and shoulders looking pattern, but nothing's confirmed here. $23 would be the quote-unquote neckline. $23.75 to $24, getting back above there would start to invalidate the pattern. So I'd pay I'd be paying, and I am paying, very close attention to financials to see how this resolves. I also think biotech is at a pretty interesting spot too. We almost had, or we did really kind of have this breakdown here at the end of May 30th, taking out and closing bearishly underneath all of these recent lows in IBB, but it only lasted about 1 or 2 days because we saw an immediate sort of hammer the next day and then follow through back above support, and we've pushed back up into this range. So IBB, I think, is similar to financials, where I'd be paying attention to see how this resolves here. I think this has some pretty good spillover effects, implications for the rest of the market, keying off of financials and biotech. But that said, 80% of the other sectors there, subtracted minus energy, are working to the upside, or at least holding up. So that is it. That's what I got for this week's video. Nice to be back. Thanks so much for watching. If you're new here, again, don't forget to subscribe if you like the video. And as always, thanks for watching, and talk to you again next time.